Good afternoon, everybody. Good afternoon. Welcome, one and all, to another action-packed day. Nah, jest, obviously. It's probably one of the least action-packed days, arguably even worse than we saw yesterday so far, except for the fact that we have had some European market breakouts take place this afternoon. Hey, good afternoon, Scotty D. Good afternoon, Paul. Hey, Michael. Good to see you, mates. Hey, Dookie. Good to see you, buddy. Good afternoon, team. Good afternoon. All right. So, we've had probably a bit of a slow start to the quarter so far. I mean, let's face it, we are only on the 1st of October today. Cannot believe how quickly we are smashing through this year. Amazing. Absolutely amazing. But yeah, so far, market's pretty stationary. Yeah, we have had this move most recently. This morning's performance was inadequate. We decided to go for the breakout here of liquidity. We were looking for that run back down to around 1933.6, and it did come out to catch us out pretty much in the same sort of 15-minute bracket as the open, which was, pretty unfortunate. But there we go. Yesterday's performance in the US markets was really good. It was actually a great start to nothing, because actually it was the end of September. Thank you very much. So yeah, it was a great end to September. We finished, I believe, September's gains were 21.07%, which was the total return for September, which, against all the odds and the headwinds and everything that we were experiencing day by day, was a very, very impressive turnout. So yeah, it was good to see. Hopefully that momentum continues, and the first couple of months of the financial quarters are usually the best, with the slowdown happening in month 3 of each quarter. So again, this won't be any different than that. Obviously, Q4 month 3 will be December of 2024. Sorry, so we will see those volumes sort of slow down and come to a halt as we get closer to the holiday season, where everyone will be having a nice time drinking way too much and eating way too much. I cannot wait for those times ahead. Hey, Nadia, good afternoon. So that's what we're looking at. So far this week, in terms of fundamentals, we've not really got too much to go on about. I'm sure Scotty can jump in here if I'm missing anything. But pretty much it's a really, really quiet week apart from Friday. We have the BOT coming out for Australia, which is always a pretty important one to monitor at the moment. They're looking at 5.8 on that one. At the moment, we'll have to wait and see what the balance of trade actually prints out as, but a bit of a reduction there, could throw things into the mix for the Aussie. We've got ISM data as well for the US on Thursday afternoon. That's at 3 p.m. Possibly decent to monitor that one, but again, market impact probably putting that maybe a 2 out of 10, to be honest. We got jobs. We got jobs job opening. Sorry, that one's this afternoon. So that one's in about maybe an hour and a half or so, I think. We've got the inflation rate. Obviously, that's already come out 1.8%. So that's fine. It's negligible, really. And that's pretty much it. And then all the way through, we don't really have too much happening. And then on Friday, it is the first Friday of the month, which means it's the non-farm payroll. And that's going to be a collection of non-farm payroll, average wage growth, unemployment rate, the full jobs data works for the United States. So my recollection of this one from the last event was it was basically a complete non-impact event, a lot of hype for not a lot of action. I think this one's probably going to be the same kind of thing, except for the fact that I'm not going to hype it up, to be honest. It is the most exciting thing that we've got to work with this week in terms of fundamental catalysts, so elements of the markets that are driving the price action. But at the end of the day, it's probably going to be quite sustained. The unemployment rate remaining at 4.2%. We might have a bit of a downtick there, maybe 4.1. At a surprise 4.0, but I don't think that's going to really shift the markets much. And then the non-farm payroll forecast this time around of 140 under a 142 previous figure. So we're really, in terms of market sentiment, we're not really looking at much of anything. I think a real surprise would be sub 100k. So if we had anything from 50 to 90, that would be obviously a bit of a shock factor and cause a volatility strike for our assets. And anything between 180 and 240 would be a surprise volatility strike as well. So really between 100 and 180, anything in between those two numbers, and I really think it's going to be a non-impact event. And because of those factors at play here, we basically are not going to see much, because let's face it, a 50k difference either side of it, not leading to any kind of shock impact, it's going to be negligible. So look, we can look forward to it. It is an event, and whether or not it shifts the markets, the data is actually quite important. It is one of the biggest ones, as we all have heard before. It is one of the biggest events of the month for the markets, but I just don't think it's going to be very exciting. So that's that. I'm not going to be here Friday, so I won't be here to stream it live. I will be on the road Friday afternoon for an extremely long drive, and so therefore, yeah, I won't be able to be there with you as it's happening in real time this time around. And frankly, I'm not too. I don't think it's going to make too much of a difference, guys. Like I said. And then, of course, we have the IV PMIs out for Canada. Unfortunately, we don't have the Canadian unemployment data, and the full employment works for the CAD. So the USD CAD probably will not be taking the front runner asset to trade and try and get some quick in and out scalps done on Friday. Probably leaning more on the side of gold, I would say, this time around for the NFP. And of course, looking at the US stock markets. On Thursday afternoon session, I will be on Thursday morning and Thursday afternoon, so doing a split session to make up for the Friday afternoon. So on Thursday afternoon, or possibly, I mean, to be honest, guys, I'm on Friday afternoon. I will probably send out expectations for the US stocks. So stay tuned in the room on Friday afternoon if you do want to be looking at potential for the US markets, because yeah, I'm 99% sure I will be able to send out some technical forecasts for the US markets then on top, so that's fine. Okay, right, let's get stuck in then, see what's going on. Commodities markets today probably leading the way in terms of trading momentum. It doesn't look like much on the 15-minute time frame, but this move down and back up again was actually pretty decent. So liking that a lot. There were trading opportunities to be had, I think, sort of around that sort of 8:15 area, back down to this low. Hindsight trading is great though, right? Because if we're looking back in time, we've got obviously point of liquidity in there, and we have a point of liquidity down here. And so therefore, if you're hindsight trading, looking at this and thinking, oh, yeah, they would have been really good. You know, I could trade that, or, you know, whatever. Actually, you wouldn't have. And if you did trade it, if you did take a short there, you probably would have been lost. You probably would have had a stop out. You could have done the counter trend one and made a profit, definitely off that one. You know, because we've got, a decent point there. Maybe from inflection point there, retest. Couple of fake out attempts, but I think that's a pretty decent margin to trade up to. We did actually nib that before rejecting it and coming back down here. So you may have been able to get the counter trend off on there. Again, though, looking at the breaker structure element for this one, it's not easy. So in review, you possibly could have looked at that maybe as a breaker structure level. So this would have been your trading margin. It's possible, but it is one of the best movers that we've had today. Gold's not been too bad as well. I would give a little shout out to gold. Credit where credit's due. It has moved, and that's that's something to be said about the current price action that we're looking at. So this one's had a little bit of a rally here. We actually broke structure around 9:45 this morning, rallied all the way back up to around, well, the major high was 26.56. It is coming down a touch now, but yeah, it's not a bad little move there. Probably would have been a profitable trade idea had you taken it from our commodities. Now, looking ahead, we've got some pretty interesting areas to sort of study. I would say, based on the current technical analysis here, that this is actually still a goer. Now, yes, of course, we have had this move here reject at 10 a.m. and then rally all the way back. But now that's done, I would expect this to actually continue. I mean, the overall trajectory of the market at the moment in Brent is down. That is the trend. So therefore, I would be looking for that continuation. And I think this area down here at around 69.88 per barrel is quite a fair price at the moment based on supply and demand metrics. So if we get, I mean, entry criteria, is it a break of structure? Is it a BCR? I would probably go for the break close retest continuation of this one. I don't know about how you guys feel. Some of you experienced folks in the room, but for me, I would probably be looking for a 15-minute break close retest, and then the full continuation works. So a slightly more conservative entry style for this one, and yeah, I think the best and safest option. So break close retest. We don't know where that's going to be. Probably looking, at this area in particular. So a BCR of this area, successful. We come up, bring that stop down. You could be looking at a 1 to 2 plus on that one, I would say. Technical risk factor from this low, yes and no. The difficulty here is that this is just a fake out. Is it going to be now utilized as a major point of liquidity? Well, in the past, I mean, maybe, possibly, definitely not a major one. If we go back on a 1 hour chart so we can see a little bit more history here, let's just stick that there so that we don't get lost. Yeah, okay. So, major inflection point back here on the 20th of March 23. Okay, so the beginning-ish of the year, Q1 of 2023. Right, so, this has been March 23 all the way to March 24, all the way through now to October now of 2024. So a hell of a long time before we have shown any real interest in this area. So I think it's safe to say that I would not be considering that as any kind of major TRF, and I'd be happy just going for it and taking that trade down short to 69.85. So that one is available to everyone and will be plugged in to the fund. So next up, we've got gold. Gold at the moment, nice price action pullback. We're in a corrective format at the moment. Daily time frame, it's just a standard kind of price action pullback here. Obviously, it looks a little bit more in depth on the lower time frames. Has it retested any major structural point liquidity? No, not really. I would still deem this to be in a, let's say, cash neutral, relatively cash neutral space. We've got cash rich here. We've got cash rich here. And, further down, we've got cash rich here as well. So these points are all areas that are loaded with orders. No doubt about it. This area here, not so much. So it's a difficult one at the moment to be able to say ahead of time, okay, yeah, gold's bullish. Frankly, based on the weekly and the daily trends, yes, okay, there's no doubt about it. Gold is bullish. I'm bullish on gold long term. I have, you guys have all been with me. Most of you, actually, now have been with me for a hell of a long time. You know how bullish I've been on gold for long term. But, we want to be seeing these better correctives coming through, and we haven't been. Not really. So I think it's just going to be the same old standard process with gold, waiting for, points to be broken through, and then trade fixed 1 to 2s or 1 to 2.2s or whatever, just permanently. Until we get some kind of better risk parameters out there. So looking at the market at the moment, yeah, okay, we've got this decent little space in here. Could we be looking at potential for a short below this area down to this area for a very short-term intraday trade? I think so. I don't think that looks too bad. So break a structure trade. This is a pending order setup. We've got this bit in here. We've got the stop loss in about there. Entry at 26.50. Target profit at 26.44. Very nice trade overall, based on some decent parameters, risk profile wise. We don't have any major fundamental catalysts today apart from the JOLTS job openings. This will probably shake gold up. You'd be surprised actually at the numbers, at the data from the JOLTS and what it does to gold. It does actually start shifting it, but I think based on a pending order at 0.25, whatever, 0.2, I don't think JOLTS is really, I don't think it's really worth risk reduction at this stage. We do get the outliers. I think it was only back in September where we had that random JOLTS number which actually sprung the market 150 pips, didn't we? So it does happen, but it doesn't happen often. So 0.25 is fine for me, and that would be the bearish trade. Looking at the bullish side, I mean the buy side opportunity is certainly there, but I think it doesn't come without elevated risk over the bearish view. So the bearish view, apart from the fundamental catalyst, is quite a clean setup. But the bullish one, we've got quite a lot of areas to contend with. So first and foremost, we need to structure the trade. So we're looking at these inflection points. Point. Okay? We have had some fake outs. That's absolutely fine. But this is really our true trading parameters. Now, if we actually, look at that from a distance, it's pretty equal sized, right? So now what we're doing is we're looking for that breaker structure element to act for the entry. So for the entry here, we will potentially look at around this area in here. Now, it makes sense from here and here, but it doesn't make sense for there, does it? Right? So this is why the bullish one is a tad confusing, and especially, if you're anything but, I guess, very experienced, because that point in there is the direct 50% point in between our two trading spaces. So it's a relatively tight margin to work with, and I'm still liking this area for the breaker structure. So I would be going for it based on this here with the target profit and the stop loss there. So that's the kind of parameter that I'd be setting up for that gold long. Now the gold long, okay, and pay attention to this now, the gold short, happy to jump in at 0.25%. The gold long, I would be removing 0.05. So this is a 0.2 trade, and this is a 0.25 trade. The reason I am taking some of my position size off of the long is because of the technical risk parameters. We have risk profiled this. We understand the risks associated with this setup. The identification stage, which is the technical analysis stage. The fundamental stage, fundamental analysis. JOLTS job openings. Yeah, then we have obviously the secondary, which is the technical, and then we have the third, the mitigation, which is risk management side of things, risk reward profile. The first and the third, they're okay. The second one is making us feel a bit cold feet, and that's how we come up with the 0.2 figure. So 0.2 on the long, 0.25 on the short. Both of these orders can be pending orders. Plug them in, walk away, let the market do its thing, and let the money work for yourself. So moving on then, that's pretty much our commodity setups at the moment. The Australian dollar versus the Canadian dollar, a lot of these FX pairs, guys, I'm just going to put it out there now, we will blast through these, okay? I'm not taking too long, wasting your time or my time in going through these FX pairs. Some of them, yes, but not a lot, because they are really, really getting off to a slow start at the moment, and there's just no point. Excuse me. So, yeah, this Aussie CAD at the moment, very sort of stereotypical beginning of quarter instrument. We're looking at significant dawdling, pretty much. Not too much to say about it at all. If we look at the daily time frame here, so the daily time frame, real beautiful breakout, and gone to nothing, gone to smoke. So this area in here, there's cash. At the moment, we're in cash neutrality. Okay, big inflection points up there. Lots of money, right? Lots of money. And even in here, potentially, there is a fair bit of cash, right? If we just widen up that zone a bit. Daily time frame and the chart's stretched out, right? So that's actually the zone realistically. So cash rich, cash neutral. Okay. These are the two this is the margin that we want to be looking at for trading opportunities on the daily. So something like that, that's our trading space. And at the moment we're not making any headway anywhere. So what we want to be watching out for is the market coming back down, pushing into cash rich lows, so that all of the banks, all of the big institutions can start loading up. All of their orders that are sat in this space will start to trigger, generating buying interest, and you will see the market start to rally up to this point in here. So we're not looking for really, we're not, obviously we're not looking for the full trade from there to there. Even though you could if you wanted to. That's obviously, we don't really do too much of that. But we can use that long-term bias for the short-term view. So 15-minute time frame to gradually grind down, come to this area, and then start looking at buying when that happens. So if you do want to be, we're going to be on every single day, right, team? So it's not like you're not going to remember because it's on our asset list to review. But if you did want an alert on there, you just come over here on TradingView. If you're using TradingView, you ping an alert in. When the market comes down here, you're going to be buzzed, and then we can work out a plan from that point on. Okay, Aussie yen. Yeah, to be honest, I haven't really got too much to say on this one either. I think what we'll do, unless we've actually seen something really moving, possibly like euro dollar, unfortunately, or the euro Oz, NZD USD. Yeah, we'll just look at these on the daily charts. So Aussie yen, we've got point of inflection here. Right, so we've got rebound, retest. What else is interesting about this? And please, as many people as possible, get involved. Get your minds engaged in what we're doing here, unless you're working. If you're working and you're listening to me on your phone, then obviously don't do that because I don't want you to get fired. But what do you think the market's going to do here? What do you think this asset's going to do? And why? I have a predisposition to this, right? So I'm already thinking, my brain's already assessed the metrics in front of me, and I've already got a picture built up. Easily reject. Okay. Paul, you think it will reject as well? Okay. Is the market starting to form higher lows? Question mark. Okay. Is the market starting to form higher lows? What do you think, Nadia? It is. Yeah. Made a higher low so it could break out long. Yeah. Look at the trend. Right? Don't worry about this. But look at the current trend. I know this is going to be very, very broad strokes, of course. But if we look at the current trend in the Aussie end, which direction is the trend? Right? And also, on top of the direction of the trend, we're looking generally at trying to place a elevated level, so an ascending level at the low or the high, and making that parallel to check out its establishment at the top of the vice versa, the other side of it, right? So, for example, I just use a parallel channel because I'm lazy and I've been doing this donkeys. But if you don't, the way I was taught, and the way I've always really been an advocate for, is doing everything manually. Okay, I've earned my stripes, so I can use the parallel channel and be lazy. But if you're still on your journey, make a parallel make a ascending level, put that on the highs, i.e. 1, 2, and 3, and then copy, paste, bring that down to the lows, and see if it meets. Okay, now in this instance, it perfectly is established at the lows. And then what you can also do is you can copy and paste that again and bring this one down to put it right bang in the middle. Now this can be a little bit on the low side or a little bit on the top side, just as so long as it's really quite sort of well placed in the middle, right? And then you can copy and paste that again. And if you have just a small margin above that center line and a small margin below, you should be able to see consistency in the price's reaction of that area. So for example, we've got one in the middle here, we've got one at the high, we've got one in the low. So let's just iron these out, making sure they're as good as we can possibly get them. So possibly like that. So this trend is established. Does everyone agree? We have, yeah, exactly. We have, I would say, what, maybe 80% of price action trading in the median of the bullish trend. I would say about 80%, maybe 75, 80%. We've got a significant portion of it, which is exactly where it should be. We are only meant to remain up in the upper limit or the lower limit temporarily before coming back on ourselves very quickly to get back into the median. So even though we're at this point of liquidity here, and you're absolutely right, it is a point of liquidity and it does look like it could easily reject it, the overall long-term market bias supports a bullish breakout based on this analysis. So then what we can be doing is setting ourselves up with trade ideas on either side of the market. Now this looks a lot nicer than the Aussie CAD, to be honest, this Aussie yen. And based on this analysis, we can be looking at taking the margin between this point at 198 to the median line at 101.90. Or we can even look at taking the trade above the median to the top of the median. So from the median to the top of the median. And we'll do this on a 15-minute chart. So if we go down to the 15-minute time frame, we'll be able to scope this out even better. So on a 15-minute time frame, for example, we could look at, say, this. And then we'll be looking at the breaker structure trade above there. And we'll have that as our target profit. Now, obviously, very general strokes will probably be looking at more like that, for example, at a 1 to 1.9 or a 1 to 1.2, 1 to 2. So that would be that trade. Now for the short trade, we have a serious multitude of opportunity here because of the way this Aussie yen has been trending. So we've got like this point here, for example, really nice point of liquidity. And we've got the major inflection point down at the lows. But we also have these nice little points in between, like this, for example, which could definitely be used as a TP. Because this is like really optimal. Sorry, not unoptimal. This is optimistic. But this is the optimal. So then we can be looking at taking a short upon a breakout there with your target profit and your stop loss, which is probably going to be, I don't know, probably about there, for example. Just looking at fine-tuning these zones. So that's about there. So then, yeah, good entry. Stop loss, 1 to 2.2.22. A 1 to 2.22. So, lots of decent analysis on this one. Now, in terms of the fundamentals on this, because these are trade ideas that will take a while to play out, we'll have to do a day-by-day check on the fundamental catalyst to be able to ascertain if there's any other, major fundamental risks. Obviously, the Aussie's got its balance of trade coming out, which is a very important economic indicator. The BOJ events, which are the biggest one for the Japanese yen at the moment, they don't do anything because everyone knows the state of the Japanese yen in the BOJ's stance on monetary policy. So we don't have to contend with those factors because they're already, the majority of the time, priced into the market. What we do have to contend with is the BOJ's manipulation of price action by flooding the market with US dollars, driving the demand down of the dollar, driving up the demand of the Japanese yen. Yeah, so we've contended with this before, haven't we? And it's really bitten us on the arse. So we do have to think about things like that, but we're not remaining exposed to the market for a longer duration of time. So because we'll be in and out of the market in the space, maybe a maximum of 24 hours, hopefully we're going to be reducing, we're going to be mitigating that risk somewhat, and we're going to be bringing that level of risk down. So that's what I'd look at for the AJ. Right. I went on a mad one there, so let's get hustling. So, just before I do continue, though, did that make sense? My thought process, how the deeper level of analysis takes place, risk profiling, the whole lot. Did it make sense, or have you got more questions than you started with? Good. All good. All right. Well, I'm trusting the rest of you who are very quiet. Just give me a shout if you're confused. And do it in the stream as well so we can talk about it in real time. All right. So, Aussie NZD. Really nice rally. This took place this morning, very early. I think it was about 2 o'clock, wasn't it? Or something like that. 1 o'clock or something? Yeah, 2 o'clock. Yeah, so we had a 2 o'clock rally up in the Aussie NZD. It has remained up at this level for a while. This is, I would say, an okay range. It's not fantastic. In hindsight, yes, it looks really good, but actually there was a hell of a lot of chop in here that you would have had to sort of withstand for a while. So your money probably would have been exposed to the market for quite some time for a, semi-decent risk-reward ratio. It's still intact, okay? So we're still well within the range parameters here at this stage. The only way the range is going to be broken is by a proper break close and retest. So positive imbalance of price confirmed via this kind of thing happening, and the same on the other side, something like that. Only way the range is officially broken free of. We do have some pretty decent trading margin back up to around 110.50. But at this stage, there's not an overall amount to say. What I would be looking at potentially is something like this, and a break of structure below there down to the range lows at 108.60. That can be set up as a pending order. Okay, it is good enough. So break of structure entry 109.18 approximately for your entry. Target profit down at around 108.60. Stop loss, you're probably looking at around 109.42 for your 1 to 2.5. That's what, just from preliminary example, I think you'd probably get out of that one. Aussie dollar, don't have anything to say on that one at the moment. Definitely in a bit of an upward trend here, but yeah, very, very poor performance. A little bit like the Aussie CAD. CAD Swiss, to be honest with you, this looks nasty as well. Definitely not a fan of this one at the moment. We did, if you look at it on a 1 hour chart, obviously it will look a tad better. Clear up some of the noise here, but we didn't even come down to meet the major low, right? So this area here is sort of where the money is, and we came down to above it and then reversed. So I really don't like that when the market comes down to above a point of liquidity and then reverses like this, because now we're in relatively unknown territory. The market could come down, and this could have just been a relatively long trap, sucking in a few retail longs here before it drops back into liquidity as it should have done. The other side of the view is it's just stopped there. It's going to come all the way back up to the highs and then to the top of the range, which is where we'll be able to look at taking shorts again. But no matter what, we won't be trading it from this point on. So we got two areas of interest: the buy side option down at 62, or the sell side option up at 63. Having a 100 pip margin between the two, it's a relatively decent established range at the moment. We have had we have this area here, which is almost like the bullish version of this area here. So you do have to kind of be a little bit careful. And if I was trading this short from 63, I know I would probably utilize something like this as a target profit, just so I was being a little bit extra cautious and looking for that successful outcome rather than going all in. So CAD Swiss at the moment, nothing to really be said about that one. CAD against the yen. Again, decent points up at the highs. Inflection point down there. I cannot say this is in a range. It's almost too inconsistent. Let's have a look on the 4 just to clear up some of the noise again. Higher low formed on the 4-hour time frame. And could this be an outlier? But then again, that low there makes this an outlier as well. So let's put that there, drag that one across. So that's what we're working with right now as a low. We've got an ascending level. Whoops, this one. So we've got an ascending level, market forming higher lows. It's generating buyer interest from an analytical perspective. We've got the high going across the top there. Does this work for us looking left? Yeah, I think for the most part, recent price at least. So they will be our trading margins. CAD yen. Again, very similar to the CAD Swiss. No current or present trading opportunity. We will be looking at interest down at 105 or 108.50. But right now, it's a sit and wait game. Euro Oz. Actually, I believe I just saw. Yeah, so the Euro Oz has been on a major decline recently, hasn't it? This area in here, previous lows, and let's face it, a huge inflection point, which saw the price action have a massive gain on the other side. Some of this back in August was due to chain liquidation and extreme risk aversion. However, it did quickly recover, and then we've come all the way back down again. The verdict's out on this one. What can we see by looking at this? I don't want to scrunch it up too much because I don't want to remove some of the finer details. But if I go to the weekly and have a look at that, what can we see here? What do you guys foresee with the Euro Oz? Daily might be a little bit better, frankly. Ranging in a weak downtrend. Yeah, okay, I like that. Yep. So it is in a downtrend, isn't it? Really, it's very soft, but it is. You know, if we just scrap out that ridiculous candle there, we have got an established high and an established low for a downtrend. What else? Think about. Think about this, right? And what we saw here. Think about the pattern that we saw here. And what could we see that's happening right before our eyes? Bearing in mind, think about where we've traveled from and where we're traveling to. And so we've come from this area down here. Yeah, that's right, man. Exactly. Yeah, exactly. So we've got this area down here. This is where we've traveled from. And then we've come up to this area, which is where we've traveled to. And now we're up at these highs at the moment. And we have verdicts out on this point at the moment, but we have an M reversal which has received an official break, close, and retest of the midpoint of the M reversal, which confirms the market's pattern. All right, so obviously we've been looking at this play out in real time, and we haven't traded this, but this could end up being a very explosive move with the Euro Oz trading down to, downwards of 148 over the duration of the next maybe, 3 months or whatever, 4 months. 5 months even, I don't know. I don't know about the price time ratio on this bad boy. I mean, this is a very, very big move that we're talking about here, but, this could be. And that area in there, I would probably deem as a very nice area of interest to think about the price action trading too. And this then makes the trading margin quite realistic. Because to be fair, I mean, the move from there to there is more than the move from here to here. And so now what we're going to be doing is there's one other thing as well. Just before I move on, there is one other thing. What else do you think could move against us from a bearish bias? What element do you think would move against us, would be against us? Yeah, exactly, mate. And the point that led us to be on the side of the bearish trend in the first place is actually the very same point that is potentially showing a bit of a bullish rejection. And so not only, let's set aside the liquidity, right? Let's set aside the fact that we've been here before and we saw what took place. We are also trading right down at an established lower limit of a relatively weak bearish trend, but weak or not, it's still established. So we have to pay it with some degree of respect. And so therefore our bearish bias could be potentially knocked on its ass because of what we're very soon to be approaching. And so it definitely doesn't come without its complications, this one. What we would do is we'll be looking for some very simple parameters. We'll be looking for daily time frame breakouts, right? So something like that pattern in there is what we would be looking for on the daily time frame, break, close, retest on the daily. And then once we've cleared out that low, we'll be looking for 15-minute trades all the way down into 154. And the opposing view is actually less complicated or less long term, I suppose you would say, because that is actually a break of structure to take the long in this margin here and go back to the midpoint of the M reversal, because that midpoint of the M reversal also nicely aligns for the most part with the median of this trend, and price action will very often be drawn to the middle of the trend. Now, just to repeat the same exercise we carried out on the Aussie yen, for the parallel channel, if you are going to be a lazy trader, copy and paste the parallel channel, grab the middle circle, and drag that sucker down. And then all you need to do is align the two middle lines, the dashed lines. So if you align both of those dashed lines in the middle there, you naturally will get your trend median. And as we can see here, we have the extreme lows, but the majority of the trend is taking place in the median, right? So therefore we can then look to take that back to the lower limit of the median, or the median itself up at around that 163 area. Liquidity is always going to be the favorable option, but when you have liquidity and trend working together in a harmonious relationship, that's the sweet spot. So you probably would be looking to go back up to liquidity. But I think if we look at the 15-minute time frame, we have probably constructed a trading margin that is actually pretty decent. Yeah, exactly, right? And so look at this trading margin we have to work with now. Let's say that this is our target profit, right? And so we will be looking at this area in here for a break of structure. We have a TRF, which is situated at 160, 170, which is a really beautiful distance away from the entry. So we're not hit straight away with a TRF to have to work through. So then target profit's going to be approximately 162.14. And the stop loss is going to be, I would say, at around 160, let's say 161. So there. And you've got yourself a 1 to 2.77, which is a fantastic return on investment for this one. Really, really solid. And the only thing you have to contend with between A and B is this point in here. That is the major TRF in this trade. And when you get to that, you're already going to be at 1 to 1.5. So then for those of you who do have the capacity to be able to manage your trades out as per the strategy, you can then, when the market comes up to this area, you can then look to, go down your 1 minute time frame, find out wherever a possible area of liquidity is, and bring your stop up just a bit in profit, just so that you're getting something for your money, basically, if the market does decide to reject from this point on. But that is a really nice trade. A really, really nice trade. And of course, we have the short, which is really nice as well, but there's no way to be able to do that on a 15-minute time frame right now. That's going to be a waiting game. We'll be waiting definitely over a week, I would say, for that one to play out. Right, guys. What's the time? Guys, we are at literally 20 past 2. So I'm going to rush down and get these US stocks done, and then we'll start doing another deep dive, another quarterly deep dive on the rest of the assets tomorrow. That's not a problem. Like I said, most of these assets we're going to have to play a bit of a waiting game anyway with, so we're not going to be missing out on mega opportunities at this stage. That's fine. Right, okay then. So, US stock markets, NAS 100 tech stocks. First and foremost, yeah, it's looking messy. It is not looking tidy at all on this one at the moment. Let me just check the Dow Jones. I didn't actually check the NAS 100 before coming on the stream, so that's oh god. Okay, well today is definitely going to be spicy. We do like spicy. We do like hot food at the UTC. So that's all okay. Short breakout opportunity. Where's it going to be, team? Where is it going to be? We've got an ascending level. Let's mark that out first. Ascending 1, ascending 2. All right, so that's going to be our ascending level. That's going to go up through there. I'm going to copy and paste this a few times and just make that margin wider because we don't want to be caught out there. So that's that. God, yeah, this is not friendly. This is not friendly. So we've got, it disappears and then it comes back again. So first established here, and then that one's come straight the way through. So yeah, it's kind of still respected. Is that going to be good enough for me? Yeah, I mean, that was decent there, and that was only on Friday. Then we had a fake out, and then we had the rebound. Then we have the breakthrough. We had another rebound there, and that was yesterday. And now we've been sat on top of it all day. Okay, that's going to be good enough. That's well established enough. Right, so we've got this area. We have a trading target profit as well. So, trading margin, we're going to have entry, target, and stop loss. You're looking, honestly, guys, very basic trade, 1 to 2. And that's going to be your lot on that one for the short on the Dow Jones. The long, I mean, it's going to be real spicy, this one. It really is. It's got to be that point there, doesn't it? Because we've had that one there. I mean, to be honest with you, it was a bloody TRF directly above it. Right, well, what time of day was that? That was 8 o'clock in the morning. Okay, that's fine. Don't really care about that then. Okay, so we've generated our no man's land. The NML is in here. And we have also generated a bullish trade, which will be taking place in here. So the bullish trade actually yields a higher risk reward, but it doesn't come without its problems. The short is a cleaner setup. There's no doubt about it. That's a massive a massive stop loss, by the way, guys. You have every chance. I mean, when I take this trade, on the basis obviously that I do take the trade, when I take this trade, realistically, my stop loss will be way less. So I'll probably be looking at a stop down at around 42.18, somewhere around there, and that's looking at a 1 to 3. So that's going to be the short, that's going to be the long. And these trades can only be triggered after the bell goes. Okay, just for those of you, whatever. Just make sure after the bell. Right, NAS 100. What are we doing for time? 7 minutes. You guys are going to be without a coffee this afternoon. I do apologize for running a bit late. NAS 100. We've got double top in there. What about these shorts though, team? That's what I'm getting lost in this. I'm getting lost in this noise for the short. I mean, that area in there, right? Look, we're gonna have to do something about this. This area in here is just, it's just awful. Yeah, it's just bloody awful. That's danger zone. Yeah, it is. Yeah, it's a real murder scene. And so I'm going to have to be utilizing this area. And that red is just going to be, it's just going to have to be real high risk. It is. It's all high risk. So this is our trading margin here in the NAS 100 today, based on current and present price action. I'm going to be looking at taking a long between these two margins based on the breaker structure. So breaker structure entry is going to be here. And that's only on the basis that the market hits liquidity first. Okay, so the market has to push down, reject, come back up. And then, of course, we have the short, which is going to be short entry, target profit. And then, of course, this area in here is going to be the area that we're utilizing for liquidity stops. And that's going to be at around 1 to 2 to 3. Okay, so entry there, target profit, and stop. Right, team, you have 5 minutes. Is everybody clear on what we're doing today for the US markets? Everybody clear? Okay. All right, traders. Well, I'm going to let you get to your desks then. Get going. Get ready. You've got time to grab yourself. I guess you have got time to grab yourself a quick coffee, I suppose. So get ready for it. And yeah, good luck out there. I hope it all goes well. I'll be with you in the room, obviously. I'm not going anywhere. I am actively participating today. So take care, guys. Have a good one. Trade safe. And I will see you soon. Thanks a lot. Bye-bye.